Good morning, everybody. It's Chris from Serene Education with the 4 majors and notes update for the 20th of December 2013. Okay, guys, end of week, Friday. Let's have a look and see what's happening on the market, especially for the 4 majors using the FX8 Ultimate template. Okay, so what have we seen on Euro? So Euro daily, we had that bearish engulfing candle, the outcome of the FOMC statement, pretty much telling us that there's further resistance here, long-term resistance at the monthly, weekly fib level. You can quite clearly see here we have 2 fib levels complementing each other, the blue one being the monthly and the red one being the weekly. Clearly resistance, bearish engulfing, now engulfing an entire week of upside and consolidation, and subsequently we are seeing a follow-through now. That follow-through should take us back down towards our prior weekly fib level here at the 23.6 level. For the time being, you can see the indicator box here. Long-term sentiment is still favoring the upside. However, very much daily, 4 hour, now leading into our hourly, into intraday time frames, you're seeing the box very much red, and the R squared is complementing some of that. And you can see that the RMO, especially on our daily, is still very much trend still higher. However, the OSMO has started to drop below that now as we see this consolidation range getting bigger. So here, knee-jerk reaction intraday, you're likely to see further sentiment driving price lower, particularly to roughly around this area here at the 23.6 level. So if you're looking particularly for trades, look to see if you could gain momentum in this. This bearish engulfing candle here really pretty much putting the stops to the upside, and the euro falling against US dollar outcome on the FOMC statement results. So here, looking towards the 23.6 for the time being, you can see a lot of consolidation here. On to sterling. This one over here we had, it's more of a positive outcome for this particular pair. Price on the FOMC statement outcome, we had a lot of positiveness for sterling that morning before the FOMC statement that came out later that evening. But you can see that clearly on the outcome of the FOMC statement, we saw price retracing slightly on that news. However, today we have some very, very important figures out for sterling, that being the current account figure. They're expecting a 0.8 billion change on the current account. However, the most important one being final GDP quarter-on-quarter figures, guys. Sterling, unlike any of its other westernized first world countries, if you want to call them that, their GDP has not been as great. However, we've seen sterling heading that group of countries, and we've seen some steady growth on GDP quarter-on-quarter figures for sterling. In fact, the last one we had was 0.8%. They expect no change on that for the forecast of 0.8%. Let's hope it builds on that. If it stays at 8.8 and or higher, fantastic. If we see slightly contraction, and then we might very well see this near-term resistance level here playing out, and we're seeing a lot of further negativity, which would take us back to the prior breakout support and resistance levels here through September and October of this year. So very, very important quarter-on-quarter. The final GDP quarter-on-quarter figures for sterling, very, very important, guys. Then we also have the public sector net borrowing. Okay, the previous figure was 6.4 billion, and they're expecting 6.6 billion. This figure we want to see less than 6.4 billion. For the fact that they're expecting public sector net borrowing to be higher is a concern, and we want to see that lower. So if it comes out anywhere near that, if it comes out at 6.5, it'd still be negative, but not as bad as I ultimately forecasted it to be. If it comes out less than 6.4, perfect. That's what we want to see. However, it comes out any higher than 6.6. Well, that could very much fuel further resistance here and fuel a further drop, a significant drop back to these levels over here before. So here on sterling, very much a resistance level over the past couple of weeks, and you can see the OSMO is definitely telling us we've seen a genuine pullback. RMO is still above because it's primarily still a long-term swing trend high. You can see that the candlesticks are still very, very positive. We've had 1 or 2 areas where we saw an arrow. However, the sentiment was still favoring longs, hence the reason why the candlesticks didn't change color, and hence the reason why there were still opportunities to the upside. When we did get a red arrow, and the candlestick complemented that, you can see its indecisiveness. Therefore, there would be no trading, and that subsequently stopped us from trading, shorting this, because the indecision candle was in place. So here, near-term resistance, FOMC statements has put a stop to any buying opportunities for sterling until we actually see a break above the 38.2 level. US dollar Swiss franc, nice bull bull engulfing candle here at the weekly fib level recently on the outcome on the FOMC statement, and subsequently since then we've had a knee-jerk reaction. Huge positive candle like that, you're going to see price moving exponentially to the, in this case, to the upside because of that bull candle outcome. You can see the long-term sentiment still favoring the downside. We have monthly and weekly. The R-square not really complementing any of that selling, but still nonetheless we are seeing lower lows, which is imperative to see a negative trend. You can see our institution moving average is very well above price, but you can see the buying sentiment now in our intraday time frames coming through on our daily as well. So very bullish candle indeed on the outcome of the FOMC statement, and yesterday going in today you can see that that follow through now, and that's the reason why we like looking for a nice bullish engulfing or bearish engulfing candles. You get that follow through, and that's exactly what we're seeing now. Heading into the daily fib level here at the 38.2, if you can stay above that this morning, then look to see if we can capitalize on that, heading up towards a 50% retracement on our daily fib level from our current high to our current low. Target those as we head into the weekend. You don't want to leave too much risk out on the table. End of week, people are going to start taking a bit of profit. We could see, we still have the Euro Economic Summit meetings. We've had them, this is the second day now. One big Christmas party, I feel, but nonetheless, those are in place. So we haven't, if it's going to make any difference nonetheless, but you want to be taking your profits when they present themselves. So here on the US dollar Swiss franc, not breaking below the weekly fib level and such. Actually, on the outcome of the FOMC statement, nice support level being forged now. You can see the Osama indicator really climbing above it. So now make note or use of that of that bullishness now intraday. If you want to drop down to our 4-hour time frame, you can see we have a blue arrow. The 4-hour candle now that's above the 38.2 level is blue, but we've got to wait for this 4-hour candle to close. Okay, very, very important. Or you could be quite aggressive, drop down to the hourly candle. Now you can see quite clearly we have blue, everything's, the candlesticks are blue above the institution. The only thing that's not in our favor is ideally a nice bullish engulfing candle. These ones of you are very, very small, and our SMA indicator to jump above the 0 level. Once we get that, everything will be in favor. Then we can target those intraday fib level daily highs that I mentioned to you earlier. US dollar Japanese yen, looking at the hourly chart, apologies, there we go, daily chart. You can see a lot of consolidation as we headed into the weekly fib level. This is on the breakout that we had of that massive wedge formation that we had most of this year. We had a nice breakout. We had the break of the monthly fib level, the pullback, and then the nice building and the continuation candle that followed suit. And subsequently, you should have been targeting your weekly fib level highs. Get above that now on the outcome of the FOMC statement. Ask that. We had a lot of consolidation. This bullish engulfing candle over here taking away all that indecisiveness at the underside of our major support and resistance level here in the shape of the April fib level highs of 2013. And subsequently now we should be targeting towards our 61.8 on our monthly fib level, and that is still a good, just short of 100 pips or so. Take away the spread, just under 100 pips. However, you can see yesterday's candle almost a breakout. We had the pullback and then the continuation that's following suit. So now you can see this candle, this particular setup, very much positive, guys. So we should be looking for buying opportunities. I've drawn a horizontal line at the highest high, intraday high. You can see, there we go. So ideally, get a nice breakout above that level over there. For example, you can see the Osama indicator has gone dark green. We want that to be bright green, and that will become bright green once we get our bullish engulfing candle move higher. You can see it's broken above the trend highs on the daily that I drew, and subsequently we should be looking for nothing more than buying opportunities. Very strong US dollar against a very weak yen. Okay, so that's it, guys. End of week, guys. So please be vigilant on your stop placements or your trigger points. You don't want to be purchasing or selling something and there's no genuine momentum behind it, because a lot of people aren't trading because they're starting to pull out or to move their stops up tight. They're trying to get out of their trades or accumulate their trades because they're going into a weekend. Just remember, next week being Christmas, not a lot of volume is going to be trading out, guys. A lot of people will be going away for holidays, Christmas season. That will follow through for most of December and then going into January as well, as a lot of other people take their leave during the first part of January. In February we start seeing pickups, so just be vigilant. We're not going to see as much volume out there. However, there's still going to be opportunities to trade. Just be vigilant and do your due diligence. Okay, back it up with some money management rules. If you are using the Serene Education template, please follow the rules of it. Very, very important. Okay, other than that, have a fantastic weekend with family and friends, and I will catch you guys first thing on Monday morning. Take care, guys. Trade serenely.